Okay, guys, so I'm going to tell you what's going to likely happen with Netflix after it reports earnings after hours. Here's a chance for you to actually get a free course. So I'm recording this about 2 p.m. on January 23rd. So I'm fixing to post this video probably in the next 10-15 minutes. It'll be up. So you have about an hour and 45 minutes to call in to talk to a 13 market moves coach. Provide a screenshot if you took the trade, and if we're wrong, we will give you a free course that's worth $2,500. So the very least, you're gonna make $2,500, okay? But I think you can easily 3x on this trade. Now I'm going to lay out a 90% bearish case, guys, based on the charts, nothing else. Okay, the stock is going into the earnings report awkwardly unbullish. And if we were to study a history of Netflix, there are moments when Netflix done exceptionally well when the stock is actually running into the earnings, which by itself is a bit contradictory. This pattern here that's been developing would lean towards calling this more of a multi-top formation. When we combine it with a bearish divergence on the RSI, which has been pretty consistent in almost 90 plus cases recently, it tells us that something is about to do this. So in this particular case, we're expecting Netflix to drop. Now, the chart is clearly, it's in a strong uptrend. So most of the people argue, well, hey, you're going to short this bullish uptrend. That's crazy, Leo. Okay, but on the next picture, I'm going to show you why it's got a high probability outcome. Now, the market has cooked the expectations for the stock quite high. So anytime we're going in with high expectations into an earnings report, is also a high probability of a stock doing exactly the opposite. Now, the key word in the Netflix earnings report probably is going to be cost, C-O-S-T. That's going to be like a curse word this earnings season. So far, every company that has reported have been stressing how their costs are going up. Even if Netflix put a pretty good subscription number, I think the cost could be a shocker, and therefore earnings per share could be overstated in the expectations, could report less than expected. So this cost factor, okay, could cause something like this to happen. So going from a highly bullish Netflix chart to what could be a total unwind, just kind of like we've had an unwind in our LMT short. We got guys that are up 600-700% on that trade since we posted. Anybody could have taken it and go review the LMT trade. Now, timing is everything when you take this trade. So guys, you got a good entry. If you trade with a 13 market moves coach, I guarantee you got a good entry if you're ready to trade at the time. So congratulations on LMT. So I will tell you this, that we've been nailing so many trades here at 13 market moves that a word of caution, right? When you nail one trade after another one, you are likely to get some trades wrong. So understand this, I'm highly confident in this trade. And sometimes when my level of confidence, is exponentially going higher with every trade, I could get a trade wrong. So let's consider that there's 10% that I could be wrong on the initial reaction. So we're expecting a gap down, an initial reaction lower, and the chart to look something like this here, basically like this tomorrow. Okay, but there's a 10%, we're 90% confident in that, but there's a 10% outcome that initially Netflix could gap higher, and then it's going to sell off later. So I'm actually going to tell you specifically how to trade. So what you do, let's say you have an account of 5,000, okay, you take $2,500, you use $2,500 to buy options ahead of the earnings report, and then you would use $2,500 in the event there's a 10% probability outcome. And if Netflix is rocketing higher to the moon tomorrow, you would use $2,500 to buy put options when it's shooting up to the moon in the expectation of a move to reversal. So it's very important that you distribute half and half. You basically buy half ahead of the earnings report, half after the earnings report. Normally, in 95% plus instances, we do not recommend buying any options ahead of the earnings. But considering the option chain right now, and considering the fact that we are expecting, not the market, we are expecting an oversized move to the downside in Netflix, considering all these things, this trade could produce nice return. Options are not overpriced, and that by itself tells you that market does not have high expectations for Netflix to go substantially higher or lower. The amount of volume of Netflix puts and calls that's being traded, it's actually a little bit light. So, guys, with a net could be an opportunity. It could be an opportunity to where last earnings report, right? Look at this nice, beautiful gap up. I think it could be equally matched. I mean, we got a pretty nice move, right? From 300 to like 4. So it's 100 points. I think it could be matched with 100 to possibly, we could see a move anywhere from 80 points lower to 120 points. That's on the aggressive side. But at very minimum, we can easily see a 60-point dropper here. Okay, and then of course, initial reaction is not everything, right? Who knows? Maybe they'll pump it up somehow during the earnings call. They're gonna find something to say. Well, the gaming part of Netflix is gonna do so incredibly well, so please overlook all the losses this quarter, all the increase in the higher cost. This is what they may tell investors. Hey, forget the costs. We're investing so much money in our gaming part, and that's going to make even more money in the next 10 years than anything else you guys have seen so far. So, again, they could pump it up during the earnings call, but I think this is a good setup. There's not a whole lot of bullishness going on. The chart looks good. There's bear divergences. There's still people that could sell. There's people clearly are not so optimistic as they are in the semiconductor sector. Guys, basically, in a nutshell, okay, you don't want to go crazily out of the money. We just send out an alert in our paying member group to buy 490 strike puts. Okay, anything from 490, 480. Okay, we're not recommending buying a 400 strike put, so please don't listen to this video and say, oh, Leo, I went and bought 400 strike puts and I lost. Because, guys, nobody's telling you to buy 400 strike puts, okay? Yes, it would be beautiful if we get an outsized move of like 120 points. The 400 strike puts, they'll pay a bunch, but that's not what we are doing. So we're not buying any puts below like a 440. So anything from 490 up to 440, basically the stock is at like 488, 490 as I'm recording this. So if we got a 60-point move, okay, the 440 puts would be by $10 in the money. Okay, so basically always select your strike price. Higher your strike price in the event you're buying puts should be higher than your target price. So if we're expecting a minimum of a 60-point drop in Netflix earnings, that means it drops from 490, it drops to 440, okay, and 490 drops to 430, sorry, and in that case you would be $10 in the money, okay. So now in the event we will get an outsized move on 80 to 120, your return is going to be substantially higher, but there's nothing wrong. Okay, we're just going and buying a couple of puts at the money, close to the money, 480, 470, because those are the ones that are going to appreciate rapidly, even on a smaller drop, let's say to 450 or 440. So guys, this is it in a nutshell. We're on the bear side on Netflix into the earnings report. After the earnings report, there's a lot of variables, but considering the earnings reactions we have seen so far, guys, yesterday we sent out an alert to buy DHI puts. The stock is down $15. That is a humongous trade. 15x on DHI puts. MMM, Triple M, that one, awesome trade. Okay, continues dropping all day. All of these are earnings reactions from different sector. And so far, I think the only reason somebody may not want to bet against Netflix here is because they're going to say, well, Netflix, that's a part of the technology sector. Technology sector is going higher. But if you listen closely to some of the videos we posted in the last few days, Netflix has been lagging, okay, the rest of the technology sector. In that argument, you could say that, well, for that reason, it's got some catching up to do. So we will find out, but I think there's more bearish signs on the chart here compared to bullish. And when the number of, like here on the longer time frame chart, we got a bearish crossover, which it's hard to see, but it's there. Divergences are consistent across the board. On the bear side, accumulation, still a lot of people can come in and sell. So when we got more bearish signs than bullish, then hey, we trade on the bear side. So with that said, guys, again, you got about an hour, 40 minutes to go ahead and call in. You go to 13mmtv.com. You schedule a trading call with a coach. You send us the proof of your trade, and guys, you get a free course if we are wrong and Netflix is going higher tomorrow and it doesn't drop, okay, at all, okay, and it keeps going higher and higher and higher to the moon, okay, we'll give you our course that's valued $2,500. So there it is, guys. In a nutshell, you get a free course if we are wrong. And if we're not wrong, guys, hey, make yourself a promise. You'll buy a charts course, invest in yourself and your education so you can spot some of these bear divergences before big drops develop in Netflix. So Netflix puts, guys, let's roll. I'll see you in the next video soon.